Hey everyone, Brian Bogner and Greg Towner here, and it's that time of the month for 5 charts in 5 minutes. All right. Our goal on this call, of course, is just to break down some very key things that we're seeing in the market right now. Make sure you also check out our 20-minute market breakdown. That's where Greg and I we dive a little deeper into what's going on in the market and spend a little more time talking through these things. But today we got 5 charts. We got 5 minutes. So let's go ahead and get started. Greg, take it away.
All right, that's great. I like your energy. I only wish the market had some of that energy right now, but unfortunately, as we know, the market's been dropping here of late. It looks like we're probably positioned to retest those June lows, and we'll see. Sometimes when you test lows, you can find some support. You can find some, technical divergences, we'll call it, to maybe hope for a bottom. But clearly, we're in a tough market. We're in a downtrend right now, so retesting that would not be unexpected at the moment. So, what's driving things? We all know what it is. It's inflation, and ultimately what the Fed's doing with inflation. And we've been in the camp that inflation is topping. It looks like it has, unfortunately, too slow for the Fed, and they're raising rates quite quickly, right? So we think a lot of the underlying metrics of inflation, whether it's commodities, shipping rates, and so forth, are coming down. Shelter, particularly rents, is not, and that's a big factor and a big sticking point that sometimes is delayed and affecting the inflation data. So that's a big sticking point. A lot of other things are starting to roll over. So we're hopeful for the future, but keeping an eye on rents. So ultimately, if the Fed is raising rates, that's affecting the whole inflation, treasury rate curve, right? So this is looking at anywhere from 3 months to 30 years on bond rates. They've gone straight up. Anybody that owns bonds know those values have been hit, which is unusual. The speed has been incredible here. It's great for those people that are wanting to earn some money on shorter term cash. You finally can, but it's bad for people that need to borrow money and companies that need to borrow money, or it's just as a competitor to risk assets. Yields are a competitor to other securities.
Yeah, usually what bids up risk assets is you borrow money at a low rate and you're investing at a higher rate, right? Now you're looking at it, and your cost of funds to buy those risky assets is getting very prohibitive.
Yeah, exactly. And speaking of the difficulty in paying more mortgage rates, right? This chart's actually a little bit old. I think they're 6.25% now for a 30-year. So obviously that's a tremendous headwind. I saw a statistic recently where if you go back 2 years, the average monthly mortgage payment is now, it's just about doubled from 2 years ago. That's a combination of the increase in rates here and, of course, the increase in the average home purchase price. So that's a tremendous headwind, and why you're seeing some softening in the real estate market.
Yeah, there's definitely slowing down in real estate, no doubt there. Well, Greg, you've been all doom and gloom. Okay. Some negatives here. I'm going to try to bring a positive here into the conversation. This is a sentiment chart that we look at. Okay. And it just measures the bearish sentiment of investors. Okay. And, this historically goes back to 87. We draw a line here right at 60. And, the idea is that when this sentiment, meaning when you get these many people, over 60% of these investors are bearish or have a bearish outlook, it tends to be near significant bottoms in the market. Okay. We're there. We're near there. Now, there's some other sentiment indicators that we look at that aren't quite there yet. So again, you never look at any indicator just on its own. You've got to support it with some other things there. But this is kind of like, like what I like to say is like a green shoot, something that, could be potentially positive, that maybe we're at a near term or some bottom. We're also entering October, November, December, the 3 best months historically in the market. The market always tends to do well into the end of the year. So we shall see. I think to Greg's point, the market's going to likely go down to that support level here. And then we'll just see, it'll be a good place for us to look and see, okay, what's taking place here? Is there any buying coming in? Is there still strong selling? And we make very rational decisions and rules-based decisions accordingly. So, with the Fed tightening, higher interest rates, inflation, all these things that you're reading about in the news, they do challenge the stock market. But this fear and some of the sentiment is starting to turn a little more bullish here. And, our advice is always, we keep a long-term perspective. Okay. Don't get caught up in the noise and the day to day. So if you have any questions, you know where to call us, 864 here, 385-7999. You've got our emails. We really appreciate you watching today. Thanks so much. Have a good day.